Right. Good morning. Good morning. Good morning, everybody. Today is on the 20th of May. It's the 20th of May. We're looking at gold. Let's check it. Let's check it out. Let's check it out. Let's see. This is what we were doing. We're looking for areas of possible rejections on this area. So I'm gonna remove everything, and then we're gonna look at how the market is. So yesterday we targeted this. We were looking for this sell down over here below, yeah, and I took a sell from this point and still on it, continue to go down because I wanted it to tap all this with this area over here. But let's see what we have today. And before all that, we can check on what we have in terms of fundamentals over here. All right, let's check in terms of fundamental. What we got today's on Wednesday. We have the FOMC minutes coming out at 9 p.m. today, Kenyan time. Then we have the CPI over here for the GBP coming the next. Oh, it's already gone, already passed actually. Yeah, just refreshing it. Already passed the CPI on the GBP. So right now we headed on the major news that we're gonna be expecting is the FOMC. Let's see tomorrow what we have tomorrow. We have the AUD 4:30 a.m. We have an employment change on employment rates on the AUD, Australian dollar. We also have some medium impact over here on the euro, 10.15 to all the way to 10.30 to 11. They have PMIs on the French and the German flash manufacturing and services. Then we're going to be having another PMI flash manufacturing services on the GBP at 11.30. Philly Fed manufacturing index and employment claims coming out on the USD at 3.30. PMIs on manufacturing and services on the at 4.45 on the dollar again tomorrow. And then the Bank of Governor of England, sorry, Governor Bailey, is going to be speaking tomorrow at 6 p.m. Kenyan time. Friday, nothing much. It's going to be happening. That's the core retail sales on the card and the revised consumer sentiment coming out. All right. So, having that in mind, we could go to our gold pair and see how it's going to be behaving. Do a fresh top down analysis. We're going to do a top down analysis all the way from monthly so that at least you can cover everybody else, everybody that is in this chart. So let me do extend to the left. No, extend to the right. Yes. All right. There we go. Right click this. Okay, and delete that. All right, so we're gonna start on the monthly, and then we're gonna break it down. Simple price action markets based on market structure. We're gonna be looking at the areas of support and resistance and breakout trades, where we can pick the breakout trades and continue pushing down with them. So the monthly highs and monthly lows are as drawn over here. They haven't changed yet. Nothing changing. All right, the weekly highs over there still the same. Weekly low, it was here, but now we have this candle trying to break. So I could say weekly low is on this week over here. Yes. All right. So we go down to daily. On the daily chart, we're gonna have a high over here. We have a daily high. I'm gonna use this one as this was the daily low over here. This was the daily low, and the market just broke below it. So now we have a new low that we're looking at, which is over here. All right, so that's the daily low. 4 hours high. In terms of the 4 hours, we're looking at this as the 4 hours high over here. The low on the 4 hours, I'm inclined to say this point, but let's see. Yeah, I'm gonna mark it, and then we're gonna go down to 1 hour, 1 hour, and see. Yes, makes sense. See, makes sense to be there as the. It's still also the 1 hour low, but the 1 hour high is over here, right over there. 30 minutes. Anything coming in? But yes, 30 minutes. We have a new high over here on 30 minutes. This one over there on 30 minutes. 15 minutes. Yeah. Yeah, so that's how we got it. We get it like this. All right, so what we're gonna do is now try to break it down into something understandable. Now I'm putting this zone over here on the where the bodies are and leaving the wicks up for a reason, because I want to say if we can get a buy above this point, if you have a candle buy above here, if you have a buy above this point, it's sweet for us to push all the way to this point. If we have a sell below this point, although I don't really like the consolidation that is happening over here, but this could be some impulse, or sorry, not impulse, aggressive sells below here. Potential, you know what, yes, those are potential aggressive sells and these are potential buys over here. Potential buys over there. So I'm gonna fit in this long position thingy over here. And you see, if we get a push to that point, I'm gonna put my stop loss just below this point. If this candle closes above this point, I'm picking in a buy. And should we break above this point, of course, definitely I'm looking at pushing all the way to this point. So I'm gonna put it all the way like that, because that's a target to look at. And that's something to keep an eye on this week for the remaining days of the week. If and when if we get a break below this point, the reason why I'm calling it aggressive is because it's gonna require some fast fingers to execute on it, and as well as some good risk management to not lose or to be in fast, because again it's gonna be it's a short place that needs to be covered. All right, it's a small place that needs to be covered. But the beauty about it is, if you look on the left, over here, there's this area that the market needs to come over there. And should we get that break going, working, then yes, that could be an area that we could be attentive to see the market tap. All right. So the potential buys going to be above this point. Should we have a candle closing above? Potential sales going to aggressive over there. But if you want to do the safe sales, you can do them below this point over here. That's where you can do a safe sell, whereby you don't really need to look over your shoulder on or be worried. But again, this one requires someone to take in an aggressive entry, and then the moment you start pushing down, move your stop loss to entry and safeguard your trades. Okay. All right. So that's it for the gold market over here. Okay. From beginning next week, we're going to be checking on probably 2 or 3 more pairs. I had some people requesting for that, so we're going to be looking at that as well. But this is what we're going to be keeping an eye on it today. Let's see how it behaves. Remember to always trade what you see, not what you think. All right, and safeguard your trades, risk manage your trades well, and hopefully everything gonna play on well on your side and on whatever you're doing in your trades. Okay, bye bye everybody, take care and have a good one. Bye.